All right. We are here in the Thrive Well podcast with the one and the only James Chavegia with Caliber New Res. Thank you for being here with us today.
Thank you for having me as always.
All right. Well, let's talk about the hot topic. There's a lot of chatter about rates dropping in 2024.
Yes.
Do you think that is an actual probability?
It has to be, right? There's been a lot of reports that have come out and it's making inflation numbers look better. We just had the unemployment report come out and we had a little bit of a reverse there. So rates have trended to go back up a tiny bit, but we're still relatively low. I think overall, probably high sixes, low sevens to give.
That's great.
It's better than 8.5.
It's way better than 8.5.
Could have been stuck there.
And we were for a minute.
Yeah.
It was rough. We were looking over our numbers in the last quarter, and it was about October when rates had hit, what was it, August, September, that 8. And October was dry. It was a dry month because of it. I mean, it's not like no real estate was sold, but considerable lulls.
You can feel the change in the temperature almost immediately. It's a weird thing too, but I feel like the average consumer, especially somebody that's looking to purchase a home, they kind of follow the headlines, the daily rate markets. And when they see the headlines that rates are coming down, it kind of creates more energy. And you definitely see it production wise, because October was like dismal. And all of a sudden November was like, wow, we're back in business.
Right.
Things are working. This is great.
I know. What a ride. You know, seeing you earlier and talking to so many people just like you, just like me in the marketplace. And just there's this unspoken like, yeah, we're almost there. The year is almost over.
Bye, 2023.
See ya.
We're ready to see what 2024 has in store for us.
And it's not like, see ya, it's been fun. It's like, see ya.
Yeah.
That's it.
We'll chalk this up to a learning lesson at some point in life once we figure that out.
It's not been fun. We did it. It's over. Let's not do it again.
Yeah.
Okay. Well, why should a buyer talk to a lender if they're not ready to actively look yet?
I think being able to have a clear and concise pathway on how to get from A to Z is extremely important. Are there consumers out there that ultimately know they're probably in a good position? Yes, but there's a lot of consumers out there that think they're in a good position. And until you actually start digging through and going through the qualifications, you uncover items that need to be fixed. I mean, I've done loans for medical professionals that, make lots of money and have no idea they have medical collections in their names. There can be just little things that you can uncover preemptively versus waiting to find out and then scrambling to try to hopefully work things out or not be able to work out at all.
Right.
So I think like a consultation, we do have the ability to do a soft pull now, which is pretty awesome. It prevents the masses from blowing up our client's phone, doesn't affect the score, because those credit trigger leads are very real, because it's just a tough market. But now we have the ability to do the soft pull, which doesn't hurt a client's credit, but it gives us the full picture. And it allows us to essentially kind of price things out, let them know where they stand. And best case scenario, hey, you're all set just like you thought. When you're ready to go, we'll be ready. And worst case scenario, you figure out they've got some problems to fix up. And now you've got more of a timeline to work with them than waiting for the spring market when they were going to enter the market to start shopping. So educating yourself and having a clear path on how to get to the end goal of owning a home, I think is always important.
Yeah, it brings me back to the saying where knowledge is power, and it is if you know what to do with it.
Sure.
Right. And I think that's exactly what you're talking about, is saying like, hey, when you go through that process and you do it in advance, you get the information you need to make the action steps that you want, rather than what happens most often this year in particular. We get all the phone calls. You're getting a lot of first-time home buyers that couldn't buy in previous markets. And they're not in a position to buy because of these, oh my gosh, I had no idea that hit my credit. I had no idea I have to clean that up before I actually get funded for a loan. So hopefully any buyers listening right now, take the step to first speak with a lender, go through the consultative process so that you're ready to pull the trigger when it's time.
Yeah, agreed. And I also think there's a large misconception and still a misunderstanding in the market of what's actually required from somebody out of pocket. There's a lot of grants, a lot of first-time home buyer programs out there that will help the client with a portion of the down payment, if not all of it, plus some additional funds towards costs and escrows. And a lot of, I think, just general consumers don't realize that they may be in a position where they can buy right now. And it kind of just sounds convenient to say, I'm going to wait, because you don't really know. But you'd be surprised how many people tell me, yeah, we're probably going to wait till the spring season to do this, but I'd like to look into it now. All of a sudden they find out they're eligible for a MSHDA grant or whatever the program that we came up with. And all of a sudden we're under contract in a month.
Yes, changes everything.
It really does. And I think that's just the guidance that they're getting from those types of conversations, the information that they otherwise would not have known. So yeah, common sense, just equip yourself with the knowledge and put yourself in a position to be able to make the decision when the time is right versus being reactionary and trying to fix or come up with the solution at the moment in time you're trying to do it.
Yes, yes. Now, on the flip side of that, would you say there is a number of people, maybe a pool of people out there that don't reach out to someone like you to find out, where is my credit? What could I get funded for? Because they're scared. They're scared to have the conversation around credit, funding, income, expenses, where their money goes, where it doesn't go. What would you say to that pool of people to say, hey, no matter what, I've seen it all. Don't worry.
Yeah, absolutely. It's actually kind of funny that you say that, because I've had conversations with clients, consumers that are terrified to have me pull their credit. They're following their credit on Credit Karma or freecreditreport.com and no idea that risk model literally has no affiliation with what an actual tri-merge looks like through somebody that we get from a mortgage company. Like, the general consumer does not have access to that kind of stuff.
Right.
So I've had clients think they have absolutely perfect credit, nothing wrong, come through. We take a look at their overall profile and they find out they actually have some things that they have to work on. And I've had clients that had zero inclination to think that they were walking out of my office that day with a pre-approval letter, and there you go. You're all set to go. You actually only needed the amount of funds that you have in your account. You didn't need all of these extra dollars. Your credit, although is not perfect, it still is more than sufficient to be able to do what you need to do. So I've had conversations both ways.
Yeah.
But why would you not, right? If this is something that you're serious about, don't delay the inevitable. Figure it out, because if it's something that you're worrying about, then you're spending that time worrying for no reason. And if it is something you have to worry about, that's fine. Let's figure out what it is. Let's come up with a solution and let's fix it so that when that go time comes and whatever your timeline is, we can make sure that you're prepared for it.
Yeah. And I think that's important for people to hear, whether the solution is right now, we can turn it around fast, or in 3 years, 4 years, 7 years. There is a solution no matter what. So start the conversation immediately.
Yeah.
I was in the salon the other day and I had someone down the way. She wasn't doing my hair or working with me, but knew I was in real estate. And so naturally, we just start talking about real estate. And she had a friend that's going through the process right now, working with an LO, working with a lender. And she's like, gosh, she just keeps talking about all the paperwork that's required. And every day it's something new. And I said, I can totally understand how frustrating that is. However, the LO doesn't want to have to request that information from you. It's simply a requirement to get you funded.
Yep.
And I wish there was a way for us to help the consumer understand you don't ask for anything that you don't need.
Yeah, I think you're absolutely right. And what the just normal average consumer doesn't realize is that sometimes when we request these conditions or items like a bank statement, for example, we're asking for this bank statement up front. Now we've got large deposits. Now we're asking for additional information because of the documentation that we requested. There was no way for us to know that we were going to need additional items until we uncovered them from asking from the original items.
Right.
And self-employed clients can definitely probably feel like they're picked on just because the documentation is a heck of a lot more. They typically have to provide some kind of profit and loss balance summary with a lot of the products. And these are things that most normal everyday people that are running their own business don't even think or know how to do.
Yeah.
But we try to do a good job of sending examples of what one looks like. And at the end of the day, we always get them done. But I think it's just that fear and fear of rejection is one of them. Like, if I put the wrong thing on here, is it going to cause my loan any harm?
Yes.
But really just not understanding that sometimes when we're asking for items, it actually creates a list of additional new items that we need. And it can be never ending at times for certain.
Yeah. I know when we went through our last series of providing documents for
Oh, yeah.
our house. We were like, oh my God.
Seriously, another thing. Yeah. You promised me this is the last item this time.
Yes. Well, and I think the more complex your way of making income is, expect that it will probably be more complex to get funded.
Yep.
It's pretty simple, right? Okay. Well, what would you say to somebody who doesn't want to talk to you because they're nervous that they don't have enough income for a down payment?
So most people don't even realize that we qualify based on gross income. Most clients assume the dollars that they take home is the income that we're going to structure. And based on tax brackets, obviously the federal and state of Michigan and Social Security and Medicaid and all the things that are deducted from your paycheck. But it's a lot more lucrative of an approval for people than they realize.
Right. So let's break that down just in case there's somebody listening that isn't fully aware of those terms. Gross income is...
Gross income is the amount of money that you receive before it is taxed whatsoever. So it is the total amount that you receive before Uncle Sam gets his hands on your money.
Awesome. So for people to understand, you probably don't have to put as much down as you think you do.
Yeah.
And there are plenty of products on the market right now that more often than not can work in your favor in down payment assistance.
Yeah, I think this market, ironically, is catering more to first-time home buyers than we've ever had in the past. It's 20 years almost of doing this.
Would you say that's because of the pandemic, because it shut out so much of that buyer pool?
I think so. I think they're being a little bit more harsh on the seasoned home buyer as far as interest rate, how they're penalized with credit, down payment, stuff like that. And they're trying to give the first-time home buyer a better chance at qualifying, better terms.
Yeah.
In like we mentioned, there's multiple down payment programs out there. There's 1% down. In some circumstances, you can actually you can come out of pocket with as little as 1% of the entire purchase price. And most people don't realize that really is all that it takes.
It's incredible.
Yep. It doesn't mean that it's going to be a fit for everybody, but that option is out there and we do them all the time. And right now, it's like our tool as well. It's our double-edged sword, I guess is the best way to say it, because MSHDA is the main resource for down payment in the state of Michigan right now. And they've had lower, like MSHDA was at 6.25% for the longest time if you didn't need down payment assistance. And that's when rates started with an 8.
Right.
And that, because of that grant program, I mean, they're 2 to 3 weeks behind on submissions right now.
They did get bogged down there. They were getting up for a minute there, right? We were looking at 30-day closes with MSHDA for a second.
Yeah. It's right now, the problem with MSHDA, and not to go too much into this, but most people don't realize is that we can't submit that file for the grant to be approved until we have full approval on our end. So imagine it's the definition of rushing to wait. You're closing that file you're getting that file clear to close as soon as you can, which you have appraisal, title, homeowner's insurance, everything's situated as if the buyer wasn't using it. And then you get in line and you wait for MSHDA to review. Yep. And right now, last time I looked, I think they were like a 12 or 14-day turnaround time. But that's business days.
Yeah, right.
So it's almost like a 2-portion process where historically, MSHDA maybe 3 to 4 business days behind. We close those in 30 days or less, no problem. Right now, it's been tougher, though, because of the lower rates that are available.
Yeah. Well, good problem to have, right? Taking advantage of a great product so that you can become a homeowner is, if it means a couple extra weeks, so be it.
Absolutely. As long as you're setting proper expectations on the list side and making sure everybody's on the same page. But those programs are what are helping put people in homes that, like you said, otherwise had no chance at competing in a 2020, 2021 market.
Right. True. Okay. Well, where do you see the market heading in the next year?
It can only get better. It's been tough for everybody. And when I say everybody, I don't care if you're in title, real estate, lending. You have to keep your head down. You've got to push harder right now than ever. But I truly do think we don't have to see rates in the 4s or 3s for things to really start picking back up again. I think we need low 6s, high 5s. I think there's a lot of people out there that are sitting on rates in the 2s, 3s, and 4s that would be more enticed to list and buy if they weren't taking a 4% hike to rate kind of a deal. And you'll start seeing more activity as a result of it. But I think that the refinance business on our side is going to be really good because now we'll have almost 2 years of past clients and call it, high 6s to mid 8s type deal. So that will make company's a little bit more profitable, which will allow us to kind of start mingling and doing things and spending the extra money and doing the extracurricular activities to generate business that everybody's strapped for right now.
Yeah.
And most importantly, in real estate, those who survive, those who work hard, keep their head down, they will thrive.
That's right.
You have less competition than you've ever had. Agents that thought getting into this business for an easy paycheck and a sale are no longer, unfortunately, going to be with us. And it gives the agents that really did put in the hard work, that stuck around for the right reason. It's going to be, I don't know if this is politically correct to say on a podcast, but it's going to be a payday for everybody that sticks around in the market and does well.
Yeah, that 10% will dominate. There's no doubt. It's already starting to turn. It's already starting to happen, which is good, but make no mistake about it. Like we were just talking about, we're army crawling to that deadline of 23. We are ready. It has been a year of hard work. So I'm looking forward to it. Most definitely.
Thank gosh, it's Christmas time.
Oh, goodness, right? Some things to look forward to for sure. What would you say the challenges or, I think more importantly, the opportunities in a first-time home buyer, a seller that's sitting on that 2%, 3% rate, looking at saying, hey, you know what? I love my home. It's good enough for what we need and want, but my income says I could move up. I could do something different. I've been waiting for rates to drop. How would you speak to them today to say, hey, go for it? What was will never be again. That was the global pandemic, and we don't want to repeat it.
Yep. And I have those conversations all the time. So if you're holding on for a rate that starts with a 2, 3, or potentially even a 4, you're going to be holding on probably forever. I don't think we're ever going to see rates like that again. So if you've gotten in a position where you've outgrown the home and you're not terribly excited about the opportunity for financing at today's rates, the rate is never permanent.
Right.
I'm not going to throw out the saying.
Don't say
it. I refuse to. But the mortgage never has to be a permanent thing. And I don't know. I mean, stat wise, I don't know if this is actually even true anymore, but one that we used to die on the vine by was that the average consumer refinances every 3 to 5 years and purchase every 5 to 7. And so you have to get comfortable with the idea of knowing, hey, if you can afford this payment, I can approve you for the mortgage. It doesn't mean that you're going to be 100% in love with the payment, but if you're in love with the home, take the payment, knowing that at some point in time, you will be able to refinance. We truly believe, and a lot of other people do, that this is going to happen at some point in time next year. But let's even play devil's advocate. Let's say it doesn't happen until the end of 24 or the beginning of 25. 12 payments, 8 payments,
exactly,
6 payments. How many extra payments do you have to make? In the grand scheme of things, we're not talking
drop in the
compound interest over the course of 30 years. We're talking about a temporary solution as far as financing to get you into the place that you want to be in. Personally, for me, and we just had this discussion, I am in that boat myself.
Sure.
If the right place popped up right now, I mean, my wife would not be thrilled, I know, because we've had the conversation, but she would do it. We'd make the move. I'd take a rate that starts with an 8 or even a 9 if it meant that I got the place that I truly want. And we are very picky, and we have all these different things.
No way.
Yeah, I know. Yeah, obviously, right? Got to have my gaming room. So.
Got to have that sweet basement.
Exactly. Walkout is definitely a for sure.
No, walkout basement. Okay.
Even someone in my position that looks at them every single day, I would be willing to let go of my 2.75% interest rate for a higher interest rate if the housing situation made sense. And we're always looking. It's not there yet. That's all.
Yes, makes sense. Now, I would say today, when we look at buyers and sellers making the jump, regardless of where the rates are at, they do pinpoint point of enjoyment. Or let's say it's a life change. It's a divorce. It's we had a baby. I'm outgrowing the property. It's I got a pay raise, even though everyone talked about how that didn't happen this year. It happened for plenty of people.
Some people it did.
I look back at numbers, even month over month. This last month alone, which is traditionally here in Michigan, seasonality takes hold. 1,400 homes went pending.
Yep.
So, I mean, people are out there buying and selling every single day, not 1, not 2, but into the thousands just in our area alone.
Absolutely.
So it's happening. So if you're on the fence, you want some more information, you can reach out to James. Of course, you can reach out to us. We'll give it to you straight.
Yeah. Absolutely.
We'll let you know if you're in a good position. All right. Well, let's talk about your work with Caliber.
Okay.
You've been with Caliber for how long?
It was 8 years this past November 8th.
8 years. Okay. November 8th, 8 years. Happy anniversary.
Thank you.
Yeah. And now you're leading a larger team.
I am. So my title is still unofficial because the person that, not to go into too much detail, but the profit and loss is essentially attached to the branch manager, and they didn't want to give me that evil.
Okay. Got it.
Because this wasn't such an amazing year for anybody at Caliber New Res.
Of course.
And so my official title and start date is January 1. And yes, I now have 7 loan officers that report to me. I am operating the branch as a branch manager out of Rochester, and I'm also still in production.
Amazing. Busy man.
Lot to balance.
Yes. Plus a full social life and 25 Christmas parties already.
It's actually so true too. Yes.
It's amazing. It's a big life. That's awesome.
Yes.
Okay. What would we say to anybody listening right now that potentially has already talked to a loan officer already? Maybe they haven't talked to you, they haven't talked to your team, and they're on the fence and they're wondering if now's a good time. What would be some products out there that maybe people are unaware of that are an offering that you could talk to them about?
Sure. So every lender is going to vary slightly in what type of programs that they offer. Okay. One thing that Caliber New Res does really well is first-time home buyers. We participate in just about every grant out there that you can think of. Certain exclusions, of course, but right now you've heard about this 1% down with Rocket Mortgage and UWM. They had started, I believe, toting this like almost a year ago. We have that product now, but we actually have it at a higher level of income. And it's a true 1% down all the way up to a purchase price of $250,000. It's forgivable. I know that there aren't a lot of other lenders out there that have that program for a fact. So that would be something like it's $5,000 in free money. MSHDA's great. Don't get me wrong. It helps people get into homes. And it's a product that I believe in, that I've been selling for years. But in this particular instance, up to $10,000 with MSHDA, but that is a loan. 0% interest or not, that is something that you have to pay back. We have grants now up to $5,000 that are completely forgivable upon the day of closing. We're working on one right now. That one we have through Freddie Mac. We have one coming through Fannie Mae for $8,000. I don't even know if I'm supposed to be saying this, but whatever. But the hardest things about these grant programs is most of them are tied to some type of income. So this Fannie Mae one, if we get our way, if we negotiate and work it out based on how many loans we would ultimately originate and sell directly to Fannie, we might not have any income caps on it. So imagine being a first-time home buyer buying a $700,000 house. You've already got 20% down. I have $8,000 in funds to give you.
It's amazing.
Yeah. And obviously anybody else, I mean, that's just an example because you would never think somebody like that could get down payment assistance.
Right.
So that's like one side of the spectrum, but obviously anybody else, MSHDA $10,000, Fannie Mae $8,000, and it's forgivable and free. I mean, that's huge.
Huge.
That'll help out tons of people.
I don't know many people that would say no thanks to 8K.
Yeah, I would. Yeah.
I would
agree.
I would be like, yes, James,
Yes.
of course.
I'd
We
like
will
to
take
go
you
back
up on
and figure out
that.
how to be a first-time home buyer.
Yes.
Good money.
Now let's redefine first-time home buyer because a lot of people listening might think literally that's if you've never bought a home before.
Yeah, no, that's actually a really good point. A first-time home buyer is defined as someone that has not held title to developed property in the past 3 years. So what that means, you could own vacant land. You could have a client coming from a manufactured home or a mobile park, that type of a thing. I shouldn't say manufactured home if they don't own the land because they're temporary renting the land. They don't own the manufactured home in those types of situations. But first-time home buyer, in essence, is defined as someone that has not held title to a real developed property in the past 3 years. Doesn't mean that you could have never owned a home.
Let's say they did own a home and it was 4 years ago that they made this purchase.
Yep. So as long as they haven't been on title to the home in the past 3 years, no problem. So example is somebody owned a home for a couple of years and they just sold that home in, I don't know, October of 2020.
Yep.
A little over 3 years ago. They are by definition a first-time home buyer.
Perfect. There it is. I think that's helpful for people to hear.
Yeah.
Because then that means you qualify for all of the things we just talked about.
Yep. And another thing to touch on, Mishta actually in their high needs area, they will help out with down payment assistance in certain zip codes as well, even if you're not a first time home buyer. So that's why I say clients having that informed discussion to know what their options are. There are so many options out there in so many circumstances where, you know, you can get away without doing the norm and people don't realize that there may be an opportunity out there for them. But if you don't make the phone call and you don't have the conversation, you're not going to have the knowledge and the ability to be able to decipher that for yourself.
Right. And most importantly, if you don't make the phone call to the right party.
Thank you. Yes.
Big difference.
I like to think I'm the right party.
Yes. Yes. Absolutely. It makes a big difference. I mean, in real estate and anything, you call the wrong plumber. It's game over, right? You call the wrong contractor and you can have the same issues. So it does matter who you speak to.
You're absolutely right.
Speaking of that, how can people get at you?
Cell phone is best. The only number I use, 586-722-8800.
There it is. Dial them up if you want to know anything about how to get lending, how to get funded. If you've just got simply questions on how to purchase a home, James is your guy.